Good morning, everyone, and thank you for choosing Market Briefing, market analysis, and financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Market analysis, November 14, 2023. Asian stocks trimmed earlier gains on Tuesday as concerns about slowing growth in China weighed on technology shares. Broader regional indexes remained in positive territory overall as investors awaited the latest U.S. inflation figures expected to show price pressures eased in October. The MSCI Asia Pacific Index was up 0.3% after rising as much as 0.7% previously. China is set to release economic data on Wednesday, including retail sales, industrial output, and infrastructure investment. The reports will provide insights into the state of the world's second-largest economy. Earnings from major Chinese tech giants Tencent and Alibaba are also due this week. According to J.P. Morgan Private Bank's Julia Wang, sentiment towards China remains fragile and markets need positive catalysts beyond valuations. Policy uncertainty, especially around a more pro-business approach, needs to be resolved. Wang spoke on Bloomberg Television. Economists forecast the U.S. Consumer Price Index slowed to an annual pace of 3.3% in October, down from 3.7% in September. If inflation continues to moderate, it would support the view that global interest rates are peaking after aggressive hikes from central banks this year. U.S. Federal Reserve officials, including Vice Chair Philip Jefferson and Chicago Fed President Austin Goolsbee, are scheduled to speak this week, potentially shedding more light on rate hike plans. The UK will also release latest unemployment numbers. Markets are sidelined ahead of the big US CPI release, noted SEB's Eugenia Victorino. Positioning is very light. A higher-than-expected core inflation reading could trigger more hawkish Fed rhetoric. US Treasury yields held steady in Asian trading. The two-year yield hovered around 5.04%. The US dollar was little changed against major peers. Investors are cautiously optimistic ahead of the Xi-Biden meeting between Chinese and U.S. leaders on Wednesday. Easing tensions between the world's largest economies could boost market sentiment. Taiwan's Han High Precision, which assembles the majority of Apple iPhones, posted stronger than anticipated profits. This suggests demand for Apple's flagship devices has remained resilient. Oil extended gains to a fourth straight day, marking its longest rally since September. Signs of robust demand despite economic clouds have supported prices. Gold was flat after Monday's increase as traders looked past inflation data. U.S. retail giants Walmart and Target report earnings this week, providing key updates on consumer spending patterns and holiday shopping demand. Home Depot and other major retailers also disclose quarterly results in the coming days. On the political front, Washington aims to avoid a government shutdown this week. Failure to reach a budget deal risks a credit rating downgrade for the U.S., according to Moody's. The potential fiscal crisis adds to existing concerns around high deficits and polarization. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. Here is the original 1,000-word script for the Market Briefing, Market Analysis and Financial News YouTube channel based on the provided text. The US dollar traded mixed against other major currencies. It was weakest against the Australian dollar, falling 0.26%. The greenback dropped 0.16% against the British pound and 0.11% versus the euro. It was flat against the Canadian dollar. The US dollar rose 0.15% against the Japanese yen but fell 0.10% against the Swiss franc. Looking at percentage changes between major currency pairs, the British pound rose 0.32% against the Japanese yen but fell 0.09% against the Canadian dollar. The euro gained 0.25% on the yen but lost 0.07% to the Canadian dollar. The Australian dollar jumped 0.41% versus the yen but dropped 0.25% against the Canadian dollar. Key economic data releases on Tuesday include the UK jobs report and the European morning. Analysts expect the unemployment rate to hold steady at 3.5% in September. Later, third-quarter GDP figures from the Eurozone will draw attention. Forecasts point to 0.2% growth compared to the second quarter. In the U.S. session, October consumer price inflation data could show a moderation, with annual CPI expected to slow to 7.9% from 8.2% previously. The euro drifted lower against the US dollar to around 1.0700 ahead of the European Central Bank testimony. ECB Vice President Luis de Guindos said the Eurozone economy will likely remain weak in the near term. The central bank has been aggressively hiking rates to combat high inflation. In the UK, Prime Minister Rishi Sunak began a cabinet reshuffle and is reportedly offering former Prime Minister David Cameron a role. The FTSE 100 index opened higher, climbing over 0.7% as risk appetite improved. The British pound edged up against the US dollar to 1.2250. The Japanese yen saw volatility as the US dollar to Japanese yen surged to 152.00, its highest since October, before pulling back. Japan's finance minister reiterated that sudden currency moves are undesirable and should reflect economic fundamentals. Verbal intervention aims to curb excessive yen weakness. Gold extended its slide after falling more than 2.5% last week. The precious metal found support around $1,940 as selling pressure eased. Concerns over higher global interest rates and dollar strength have weighed on gold recently. In conclusion, we'd like to thank you for watching Market Briefing, market analysis, and financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.